of what's going on.
Right. Because someone asked me that question, apart from you, someone else asked me to just take a look at it. Actually, what did she say? She said, Celia. Hi, Celia. Who is Celia?
That's me.
Oh, is that Gladys?
Hello?
Is that Gladys? Right. So
Probably breaking transmission.
Yeah.
Hello, it's Irene.
It's Irene. Oh, Irene, how are you?
I'm using my data phone.
It's good to have you.
Thank you.
Your computer is showing us Celia Warrior.
Yeah, that's my daughter's phone.
Is it? Okay, I get it now.
I'm using my daughter's phone.
Okay, I get it now. No, good, I get it. Understood. Right. So, welcome everybody. Salsa is here too. Yeah. Salsa, that should be, what time is this now in Australia? What time is it in Australia now, actually?
It's just about 6:31 a.m. Monday morning.
1 a.m. Yeah, I guessed as much. Guessed as much. Hey Jeff, how are you? Getting ready to sleep?
She just woke up.
Right. So yeah, thank you everyone. Thank you everyone. We will just because again we'll be racing against time before the market opens. So hope everyone had a good weekend so far, and getting ready for the new week. Some of you had a good week last week. Logan is yeah, very good. I think the progress you've made is awesome. I think Sharon is both of you are doing about the same thing, right? Logan. Oh, Sharon is here too, yeah.
Yeah, Sharon is here.
Hi, Chima.
Hi, Sharon, how are you?
Good, and you?
Awesome. So both of you are doing about the same thing, right? Same sort of results, yeah?
Straight, yeah.
Awesome.
So we're working as a team. We bounce things off each other.
Yeah, no, very good. Very good. Very good. Right, so let's try and make a start. So today I'm just going to look at briefly, I'm going to look at the 5TT gap system and just briefly again go through what we are looking for in a gap setup, and I'll also look at ERXGen Breakout. Let me see if my guys are here now, because someone needs to tell me how I'm doing with time, because I'll try to do the ERXGen Breakout first so that we can then go into the gap and the market opens and we can look for gaps as the market opens. Who will tell? Okay, Junior is here now. Who will tell me when I'm running out of time? Baby, will you just check for me, yeah? Around 9:45. Just give me a signal, yeah? Thank you. Right, so let's go for it now. So let me kind of share my screen. Okay.
Hello, good evening, everyone.
Hey, Junior. Right, so is my screen showing now or not?
No, not yet.
Okay. Hey, how about you here?
Yes, sir.
Right.
Oh,
You see
there you go. Yep.
You see my screen now, right?
Yes.
Let me just move over here. Right, so maybe before I actually do this, I need to just use the whiteboard. So what we're saying is, if you remember our OHLC, so if this was a bullish candle, the close price is here, the open price is here, this is the high, and this is the low, right? Everyone gets that.
Yes.
And for bearish candle, it is the opposite. So the close is here, the open was there, high is still there, and the low is still there. So I will color this up. So on my chart, this one here is the red candle, and this one is the green candle. So this is indicating price coming down, and this indicates price going up. Everyone gets that, right?
Yes.
Great. And we know that typically, let's say we have a bullish candle, yeah? So price opened here and closed here. Typically what we have is the next candle opens here. So the open price will be that, the O will be there. And depending on how the day goes, if the day goes up, it means that the close will be here, and we have that happen. If that's not the case, if that doesn't happen on the day, then we might have a close below here, which gives us a bearish candle. Yeah, everybody with me there?
Yep.
So clearly the close price of the prior period is the same as the open price of the next period. Yeah. Now we do have occasions where, say, I have that happen, and that's my open price, that's my close price. We do have times when price then, instead of opening where the prior period closed, it opens, say, at this level here. So we have the open price here, which means that from the close of the prior period to the open of the new period, there is this gap here, and that's what we call the gap. Yeah. And what we have found that happens most of the time, doesn't happen all of the time, nothing happens all of the time, but most of the time what happens is that when you get a gap like this is what is called, because it opened up, this is what we call a gap up. So this situation here is a gap up situation. And what we're saying is that when we have a gap up situation, the market notices that there has been this abnormality here. And so what the market does then is traders, participants in the market, push price down to go touch that area again. And that next day, that next period might actually finish off lower. So we might have something like this. Or we might have the day or the period. Oh, yeah. So we might have the period end up going, the low coming down here and finishing up somewhere up there. But the low comes down and closes the gap. Is everybody with me? Is everyone with me?
Yeah.
Any questions? Any questions? So that's a gap up. We can also have a gap down. So this is the close, open, close, and then the next candle opens, instead of opening at the same place, it opens maybe down here. And this is the open of the new period. And so again, once again, we have a gap. And what would we expect price to do sometime? We expect price to go up to close the gap, and it can continue going up, or it will just turn back down. But it goes and covers that gap. And so when it does that, it actually presents us a buy opportunity. Hi, James, as it were. Yeah, so that's simple as I can put it very quickly in like 10 minutes. Yeah, and so what then happens is, what we want to do, how do you trade this? How do you trade this? So if I have again a bullish candle, it might be a bearish candle, it doesn't really matter. If I have a bullish candle that closes there, what we want to make sure we are doing is we are available when the next period opens. So like today, the market closed on Friday. So the Friday candle will be like this. Friday daily candle, for instance, will be a completed candle like this. So what we want to wait for is when the market opens today. And if we are available, then what we want to be able to see is we want to be able to see a situation where either price opens at this place, which is there is no gap, or we might have a situation that price opens somewhere up here, which means we have a gap up and we'll then be looking for a sell opportunity. Or we might have a situation where price gaps down and we're looking to take a buy opportunity. Everyone with me on that, right? Yeah, I'm racing through this. Yeah, so immediately the market opens. If we get a gap down like this, there is no need wasting time. Just do what on your chart? Buy. That's all you need to do. Just click buy in the market. And but then you need to select what trade size you want to use. And I'll say for all of you starting to trade, just start at the 0.01. Just get experience with getting into this, 0.01, 0.02 on your demo account. And immediately the market opens, gives us a gap down, just buy the market. Not pending order, is instant execution. Buy 0.01 or 0.02. And then let's see what happens throughout the day. Price might come down a bit, then go back up again. And in that process, gives you some profit opportunity. Yeah. Is that any questions about that? Jeff, is this clear?
So far, it's still fine.
It's fine, yeah. Sam, is this clear?
Yeah, very well. Thank you.
Awesome, awesome. Who else wanted clarification on this?
Yes, Chim, I want to ask a question.
Okay, go on, Dan.
Yes, sometimes in your indicator, if you're using your indicator, you will see a gap down situation or a gap up situation, and the arrow will indicate the direction of the movement. But in the chart, there will be opposite movement.
Yeah, okay. This is a very, very, very good question. Now, what you will see on the chart, let's see, let me get my chart now. So what you see on the chart here, you can see, okay, yeah, it's also is clear. Glad this is clear. Great, great, great. So what you will see here is, for instance, I don't know which one I'll use as an example to explain what you said here. This one is an example of a failed gap. Can you see that? Let me get my tool. This is an example of a failed gap. Can you see that?
Yes.
Yeah? But this,
yes, it's clear.
This is not a failed gap. This is a very perfect gap, completed, made money. Even though finally at the end of the day, it came low, but you're seeing the final thing that happened. Sometime in the day, price went up and closed that gap and even went up this way before it actually then went boom, down. Does that make sense? Oh, actually, I might have a simulation going on now that might just be able to show you. Just that it happens quick. So I don't know if you will see it happen quick here. But yeah, just one more minute before I can, let's see that simulation. Now you can see here, I don't know if you can see what happened here. There was a gap here.
There's a gap up.
Yeah, so there was a gap up there. Do you notice that price came down? So this was the open of that candle here. And then the close of the other one was there. You can see that price completely closed the gap. This low here came down and closed the gap. And then price went back up. So you're making money. The area for your highest probability of profit in this system is the gap area. So you've got to just target the gap area. Any other thing is bonus. So don't be greedy. This is a quick just take the profit. See this one now. Can you see? It's executed a sell trade and price went up a bit, then started to come down. Can you see that going down? And then what I'm doing there is I'm also trailing the stop. Did you see that?
Yes.
Yeah, and that's exactly what you want to do in your trading.
Okay. So that means you don't have to calculate you don't have to wait for the candle to go down or go up. Just once you see the indication, buy or sell.
See,
Just
watch
buy
this
or
one
sell.
now. Watch this one. Watch this one. Can you see what happened? If immediately the price opened, it bought. The price went down first before it then started coming up. And then as price started to go up, it just trailing the stop. Did you see that?
Yes.
So immediately you get the gap because you don't know where price is going to go. You're not, your job is not to be, oh, it's quarter to here. Your job is not to be, thank you, Lord. Your job is not to be a fortune teller. Your job is just to see what price is doing. So immediately the market opens, that new candle opens. You ask yourself, see this one now? So a new candle opened is a buy opportunity. Price went down first, and then boom, 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 is going back up now. Can you see that? And as it's going up, I'm just trying to trace the take profit. Did you see that? Did you see that?
Yeah.
Yeah. Any other questions before I switch to ERXGen?
Yes, I have a question.
Okay, who is this?
Do you mind? Jeff.
Jeff, okay, Jeff.
Do you mind taking 2 examples of one gap down and one gap up and show me how to enter the trade? I mean, like how to.
I can't take a trade now because the market is not open yet.
I mean, even with the previous example that you have, the previous market, maybe if you can go back.
So let me see if I can hold on to this one here. Pause. Can you see what happened here? Yeah. So look at this example here. The prior candle closed. It closed here, right? Because it's a bearish candle. So this candle closed here, down here. Can you see that? Let me.
Yes.
Let me use a straight line. So this candle closed around here. Yeah. And then when the new candle opened, it opened there. Can you see it's still so slim? You cannot see it's up to 15 pips because this is GBP NZD. So this gap here must be at least 15 pips before I regard it as a trading opportunity. So yes, it is up to 15 pips. But immediately opened, you can see nothing. I've just immediately that candle just opened. That's when you buy. You in this case you sell.
Yes.
Hey Moses, yeah, that's immediately you see this. That's when you sell. And once you then sell, you're expecting the price will move to close this. And so let's see what price did sometime during the day when this happened. Can you see? Price went down. But it doesn't mean that this price eventually will finish off down. It might still finish off up. But right now at this point, it has closed the gap. And that's why this area here is where you want to take most of your profit. And then any other thing, if price continues to go down, is bonus. And so let's see where this one ended. So this continued to go down. Can you see? Continue to go down. And I'm just trailing the stop. Boom. And it takes me out. Yeah? So that's an example of a gap up, which became a sell trade. And what you would have done there, immediately you see that this is simulated, so it's happening very quickly. Even though in reality it will happen quick, but you have a bit more time. So what you just need to do immediately you see a gap up is come to your new order. For me, I'll say to you right now, just don't think about calculating stop loss, the trade size and all that. Just take the smallest trade size, which is 0.01. It won't be any less than that. So take 0.01 as a start. Immediately you see the gap up, all you need to do is 0.01 and just, in this case, is sell. So you just hit sell here. Boom. That's it.
Okay.
Yeah?
So there is no need to put stop loss and
No, not at this stage, because remember, you're looking at, remember what in reality, you should set out on Sunday nights like this before the phone call, before this Zoom call. Set out maybe 7, 8, 9 currency pairs. Just set them out like this. Just set them out all set out. Yeah. And have your indicator on it. Have the gap indicator on it if you have it. Yeah. And on each of them. Or you can even have it on just one. It doesn't matter. And all you're doing then is I'll show you what to do with this. So I have my GBP AUD right now. Immediately the market opens, there is no gap. I take the next currency pair, drop it. There is no gap, or there is. There is no gap, or there is. You know, I just keep doing that for the 5, 6, 7, 8 currencies that I want to select. And if there's one that I then see a gap, I just go straight to new order, buy or sell, whatever the case is, and do it. I think I'll do an example live when the market opens if we have gaps, so you can see. Then after I've filled the trades into the market, I can come back then and set my stop loss and take profit. Does that make sense?
Okay.
So that you're not wasting precious time, precious execution time, trying to set stop loss and take profit for something that will happen in the next 20 minutes. Does that make sense?
Yes.
Yeah?
Yeah, it does.
Awesome. Awesome. Right. So let me, before the market opens, I said I was going to do ERXGen first, but I did GAP first. Right. So let's look for ERXGen chart. Chiel, what was your question?
Hello.
Hello.
Okay, I was asking that you should just give us.
Lost you. Lost you. Okay, I'm going to just again, the full explanation to the ERXGen breakout system is in the where? The members area. There's a course there for it. But let me try and go through. Right. So what we're trying to do, there are 3 rules. The first one is I must have an intra-week trend. Yeah. Second one is the Asian session range. Range must be tight. I will tell you what tight means. Yeah, must be tight. Let me make this bigger. Yeah, and the third one is that Asian session, the Asian session range must be at the top or the bottom of the previous day. Yeah, you get that? There are only 3 rules. That's what you're looking for. Now, what do those mean? Remember what we know as I explained this to or tried to explain this to Logan over the weekend. Now, when we have, say, a trend, what kind of trend is this?
A downtrend.
That is a downtrend. So price is making lower highs and lower lows. Yeah, so it's a downtrend, correct. Now, when you come into the market and you see a downtrend, this is the point where you have just noticed this downtrend. There are only 3 things on earth that can happen to this trend from this point you have just found it. That trend can turn back and reverse. Yeah, that trend can continue the down move, right? That's the second thing. So the first thing is it can turn around and keep going, start reverse and start going up. Or it can continue in the same direction, right? Or it can just range, not going up or down. Is everybody with me there?
Yes.
So those are the only three things that can happen to price a trending situation that you just found from the point you found it. Yeah. So that's what we're trying to take advantage of when we're trading the ERXGen breakout. We don't like the range because the range doesn't give us anything. So what we're trying to do in essence is when we have spotted a trending situation, we want to take advantage of the possibility of price going back up. And so we want to buy. Does that make sense?
Yes.
Or if price continues in the same direction, what we want is to take advantage of a movement down. And we do what there? We sell. Does that make sense?
Yes.
Yes. Okay. And so the way we do it, we have 4 minutes before the market opens. The way we do it then is we look for, my first rule is what? Intra-week trend. So let's assume we have, price doing this. And what we have found, what do we call intra-week trend? It's a trending situation between 2 to 3 days in the trading week. And that can be Friday and Monday. It can be Monday to Wednesday. It can be Tuesday to Friday. Yeah, but we just want to see 2 to 3 days of trending bias. Yeah, and what we want then is, oh, this is the first day. Then the second day started from here, came up here. And then what we want to then mark is, we want to then mark this area here, which happens during the Asian session, where we know that during the Asian session, not much activity happens. And so we want to take advantage of the outburst of price during the London session. And so we mark out the Asian session, which is usually a quiet period, and we are now waiting for price to break out of this range and continue going up if it was going to go up, or it can break down and then reverse that intra-week trend. Is everybody with me?
Yes.
Yes.
Yes. Hello.
Yes.
Yeah. Does that make sense?
Yes.
Yes.
Does that make sense? Thinking
Very
behind
well.
it.
Yes.
Yeah.
Yes.
Yeah. But the reality is we do have times when we get this and we don't like this because it will come here, take us in, come out again, come down here, then take us, that is crazy, man. Yeah. We don't like those kind of days. The days we like are days when price just goes boom, 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 poof. Just goes up. It usually does something like this, bush, then comes down again, then goes up. Yeah. Those are the days we love to have. We love to have all those kind of days, or days that it does this, poof, comes back and then continues to go down. Does that make sense?
Yes.
2 more minutes. Yeah?
Yeah.
So that's what we're trying to take advantage of. Now, second rule says we do not want the Asian session to be, we want the Asian session range. So this range here, we want it to be tight. What do we mean by tight? I do not want the Asian session to be to just have trend. So what we don't want to see during the Asian session is, we don't want the Asian session to be big like this, because it means that most of the action has happened during the Asian session. So the price is no more, doesn't have enough momentum to give us that push or push down, whatever, whichever the case is. Yeah, does that make sense? So we really want, our preference is to have this to be tight. And how have I explained tight? I want it to be not more than 50% of the average true range of that currency pair. So as long as I still have 50% of the average true range to go for price, to go for profit in the new period, then I'm good. Is the way I see it. Does that make sense? Yeah. And then it is what time now?
10
o'clock. So right. So let me take these examples now for you. Those of you that want me to do this, let me share my screen so you can see what I'm doing, so you don't miss. So let me go back to the platform. Yeah. So what I would have done on the platform, is like what most of you will have. Where is my normal? Where is my normal one? Is it here? Yeah, so this is it. So there's no gap on USD JPY. So I know there's no gap. I just drag Euro USD onto the chart, no gap. USD JPY, no gap. Euro JPY, no gap. AUD USD, no gap. GBP USD, no small gap, but doesn't count. USD CHF, no gap. Which other one will I be looking? AUD JPY, no gap. GBP CHF, no gap. Can you see price has already moved? That's why you have to be quick.
GBP CHF, there is a gap.
Which one?
GBP CHF is a gap.
No, not on this broker.
Oh, okay, fine. That's right.
USD card, no gap. GBP AUD, there is a gap here. Can you see this gap here? And it's a gap up, which means I want to be selling. So I just go to new order. I told you to use 0.01 or 0.02. It doesn't matter. Let me use 0.02. And I just sell the market straight away. Boom, I've done that. Admit. Yeah, does that make sense to you? And then GBP card, is there any gap? No gap. GBP NZD, there is a gap. I just do what? And it's a gap up. What do? I just sell the market straight. Boom. GBP JPY, there's a gap and it's also gap up. What do? New order. I sell the market. Boom. Euro NZD, no gap. GBP card, no gap. Euro AUD, no gap. And those are probably the ones I normally check. Does that make sense? Does that make sense? So there was GBP JPY, GBP AUD, GBP NZD, I believe. Yeah. Sam, Jeff, did that help?
Yes. Yes.
Right. I'm just trying to see if I can take a trade for real on.
There are gaps on Insta Forex.
Yeah, there are gaps on Insta Forex.
Yeah.
Right. Right. So let me. Oh, sure. Where's my sure? I'm just trying to find me gaps on this.
Please, Chima, I have a question real quick.
Yeah, go on. Ask the question.
Yes, I'm a bit confused there. I thought you said you just have one forex trading. Why are we having a different brokers starting at different times and all that? I mean, I had thought there was.
No. Did they all start at different times?
Because I'm hearing you say that this broker have not started, or this broker.
No, I didn't say this broker has not started. He said there is gap on GBP CHF. I said not on this broker. That does not mean the broker has not started. It can mean that, but that does not mean the broker has not started.
So why are we having different gaps on different brokers? I thought it was supposed to be the same global currency trading. Why are we having different?
When you walk into, you're in Nigeria, right? Who is asking this question? Yes. Sam, yeah?
Yeah, Sam, yeah.
You're in Nigeria. When you walk into GT Bank and look at their board for Forex exchange, do you notice that it is different from when you walk into First Bank?
Yes.
So why is it not the same Forex market? So why would, or even if you don't forget the banks, forget the banks, you go to wherever it is they exchange money in Lagos. I don't know where they exchange money in Lagos. There's somewhere around that Ikeja
they
area.
change.
Yeah, but there's somewhere around that Ikeja area, that Alausa area, that I think they exchange money. Yeah, when you go there, you hear all those guys telling you they will give you at 350. This one will tell you give you 360. This one tell you this is not the same money. Yeah, answer now.
It's the same.
It is. It is.
Now, what I'm trying to do there is I'm trying to bring this down to reality for you. Now, brokers are like banks or like organizations, and everybody gets their pricing from. There are selected banks. It's called what's it called again? LIBOR. Got rid of LIBOR. So interbank exchanges. So there are big banks like the Goldman Sachs, Barclays, RBS. Those are the big banks that actually will give a lot of other brokers or all those kind of companies, smaller banks, price for certain currencies. So exchange rates for certain currencies. Now, like anything, the more clout you have, the more influence you command, the better price you can get. Does that make sense? So when the market opens just immediately, even though Barclays has said that this is where the price should be, some brokers might not get that price immediately at that point. They might get something more expensive. So on their chart, immediately, it might not show where that price is starting from. These things are tiny, subtle differences. They're not like huge. And because I don't trade any gap that is less than 15 pips. When you're talking about pips, don't forget that pip is 4 decimal place. So 1/1000 of the full digit, if that makes sense. So it's so small, it's so infinitesimal, if that's the word. Yeah, but it can be a change for me who is saying I don't want any gap. So if the gap is 14 pips, I will not recognize it. So the difference between one broker and the other might just be 1 or 2 pips. And if it is a day where that 1 or 2 pips is, the gap is only 15 pips and some other person is 14, then my system won't pick it up and I don't mind. But it doesn't mean there is no gap. If you look at those 2 brokers, you still see gaps. It's just that the size of the gap might have made one not recognizable by my own rules. Does that make sense? So one might be 15 and the other one might be 14 or 13. That's still 2 pips is not a lot.
Right. That's okay.
And that's why there's that. It seems there's a difference, but it doesn't matter. It swings back and forth. For one day you might not find it in yours, and the other person finds it, and the other day you find it in yours, and the other person doesn't. Okay, yeah, like Logan is saying now that yes, that some markets are not open as of yet, and that's true. Some brokers hold on, and you've got to realize that sometimes, and it happens not every time, are fond of actually doing this. But what tends to happen is that they might not activate trading for the first 10 minutes, 15 minutes, because they realize that usually there are gaps. And so they also want to make sure that they can, remember these guys are businesses. So sometimes they just, they don't open the market. It's just, they don't open their platform for trading. These things happen. They don't happen every time. Certain times you'll be able to take trades, or most times you should be able to take trades. Who has hot forex? Is hot forex trading now? Who has a hot forex account? Right. So do I have any questions? Oh, Logan says, okay, markets are now open. Yeah, great. Yeah, great.
There is a public holiday today in Australia. Will that be an effect on any currency traded against the Australian currency?
What can happen is things can just be slow. If it's just Australia that has the public holiday, then the impact will be there, but not so much. Because again, even though Australia is one of the 8, so the 8 strong currencies are USD, GBP, Euro, AUD, NZD, JPY, and CHF. Yeah, CHF. Yeah. Did I miss someone? I missed one. Okay. And CAD. So that makes it the 8. And CAD. So those are the 8. And I would suggest that anyone coming into trading, don't worry about any other currency. Just look for currency pairs of these 8. Yeah, so GBP USD, GBP Euro USD. Just look for those ones. Forget any other thing. Why? Because all those other currency pairs, there is not as much liquidity as you will get with the major ones. So it's directly answering your question, things will just be slow. So where some people might like to trade the Asian session, even though naturally it is slow, it will even be slower now because not much activity, commercial activities are happening because of the bank holiday.
Can you mention the major currencies once again? Sorry.
GBP, USD, Euro, CAD, CHF, JPY, NZD, AUD. So those are the major currency pairs. Those are major currencies. But there are currencies that are called major pairs. The major pairs are every of these ones that I've talked about now, paired with the USD. Those are called major pairs. Then the other ones are called, crosses. So GBP, NZD, GBP, JPY, GBP, AUD, AUD, JPY. Those are all crosses. Yeah. And in reality, some people, when they start trading, only focus on 1 or 2, Euro USD, GBP USD. And that's okay, because what you're learning at that stage is just how price moves. So don't try to confuse yourself with multiple currency pairs if you don't have to. Yeah? Questions?
My concern was for you to show me how to enter the stop loss and the take profit from the gap here.
Right. So now I've entered those trades. Can you see my chart, right?
Yes.
So those trades are on now, yeah? So what I will do now, when you have gained experience, what I'm going to show you now is not necessarily what you would do. You would do things differently. You would have known the size of the trade you'd have taken before you entered that trade. But just for the sake of what we're doing now. So what I will do then is, you see in this example here, the GBP NZD, you can see that line on my chart is the entry price.
Yes.
If you take the mouse and point to it, you can see that there is another arrow, up and down arrow by the bottom. It means I can click, hold, and drag up and down. Can you see that? And when I drag up and down, you can see there's a red line. When that red line, this is a sell trade. When that red line goes above the entry price, you can see what that red line now says. To that number here, which is the other number, then SL, which is stop loss, then it tells me is it minus 11.04 USD. So this point here, from this point here to going up is minus 12 USD. If I set my stop loss there, so if I can take it up to this place even, And you can see it tells me if price ever gets to this level here, I'll lose 95 minus $95.65 dollars. And that's 736 pips, as you see it. So, yeah. So, but what I want to do is I just want to set that stop loss to the high of the previous candle, as an example. You can set it to only lose, if you want, you can set it, I want to only lose maybe £5, $5. But I like to use structure. Yeah. Yeah. And that's the stop loss set. Then the take profit, same thing, just drag it down. And typically, I usually want to take my profit really at the close of the gap. So if I drop it here now, it's possible now that price will then come, which is just where the gap is. So that's about 30 pips. But this, remember, doesn't look like good risk to reward setup. For those of you that pursue those things, it doesn't look like that. Why would I do that? Because I know that it's high probability to get this gap filled up. So I don't really mind that.
Okay.
Yeah, Jeff?
Yes.
Did you see that? Yeah. So what's the next trade actually then on that one? So the next one is GBP AUD. So I can come back to my GBP AUD. GBP AUD. I can come back to my GBP AUD and do the same thing. So stop loss, I can decide to set it there. I'm just trying to mark this point here, this high here. And then my take profit, I can just give myself a little bit of room there as well. The price to come down and fill me in. Now, if I'm trading this automated, I don't do this. It happens automated. In fact, the take profit is down there. You don't even see the stop loss is way up somewhere there, but that's not a real stop loss. But anyway, for you doing it manually, this is what you want to do. And the third trade I put on was GBP JPY. Where is it? So again, similar thing there. I put maybe the structure level I can see is this one here. The closest one I can see is this one here. Here. The price keeps going up there. I don't want to be in that trade. Boom. So I put it on there. And then again, I can say I want to just take me how many pips now? Just covered it. Something like that. For me, it's important that you just try this. Then we can then start looking at fine-tuning things and at where you actually put 1 to 1, 2 to 1, all those sort of things. Just get onto this on your demo. Do this. Yeah?
Yes.
Sam?
I want to ask a question.
Okay, Manuel.
Yes. If you take only one trade for this gap trade, how do you trail your profit or your stop loss when your take profit is so close? If it takes you out, then you will not be able to trail.
Yeah, in this example, yes, I can't trail it because I can't trail it. But in answering your question, because what you're asking me now is it's not advanced, but it is further away from someone who is still just learning how to place this take profit and stop loss. The person doesn't yet know what you're talking about, stop loss trailing. But yes, you're correct. If I want to trail my stop loss, in fact, I won't even have a take profit at all. So this will be completely out of the picture, or it might be somewhere down there. I can pull it down there, something like that. I can actually do that. And then what then happens is once price starts to move down, because right now I cannot do it. It won't let me do it. If I drag the stop loss to this place now, it won't let me. Yeah, because stop loss cannot be behind the bid price. But once the bid price goes down, good night, love. Once the bid price goes down, then I can start trailing this stop loss and just following it.
Yeah. Okay.
But right now, it's
Okay.
all about just getting a solid take profit somewhere.
So in a gap system, you don't really need to take 2 trades.
You can take 2 trades if you want now. You can take 2 trades
So
if you want.
okay. So
If
that
that's
one
how you want.
you can take your profit, then trail the other trade.
Yes, you can do that. In fact, what I do is at 15 pips, I close half of the trade, which is what you're asking. You can take 2 trades, and then the other one is trail. Where's that simulation that we were looking at before? Has it finished? I think it has finished now. March 2018. No, it hasn't finished. I think we paused it. I paused it when I was teaching. Yeah, I stopped it. Nope, it doesn't even have, but it has taken some trades. So, yeah. Okay, that's another example. So price goes up first. Can you see? This is why you need to give price chance. It will actually fail. I think this will fail. Boom. So it has failed now. But in reality, you would have had a stop loss. You'd have had a stop loss that is probably here. Yeah, or maybe somewhere else. But this is a structure I would have used for stop loss. But in this case, the EA, when it takes the trade, will set the stop loss somewhere very wide. But that's not the real stop loss. The real stop loss says if price breaks a structure like this one here, just close the trade. And you will notice now that it has now dropped. And how much would that be in reality? Just $6. So on a 500, I was doing this because one guy was asking me about it, and he has only about $500 in the account. So if you look at it now, $6 in 520 is what percentage? What percentage is that? 6.37 divided by 527. 35. So that's about 1.2%. So again, that's the point. The main thing for me is you've got to be responsible. You've got to be disciplined. Risking 1% on the trade, and even though it closed up there, it's still 1%, and irrespective of the size of the account. As an example, to take me, if I'm losing consecutively 1%, it will take me close to 500 trades to wipe my account out. Some people think it's 100, but it will take me close to 500.
Please, I want to ask. I've noticed that some brokers don't open to all these crude gold sales at this period. Is there any reason for that?
When you say at this period, you mean on Sunday?
Because I'm just looking at
Or
something.
what do you mean by this period? You've got to be clear.
Yeah, this early, as in on Sunday like this. Or do they all open?
Yeah, a lot of times those things are actually traded like stocks, which are traded on exchanges, and exchanges are like 9 to 5 jobs. Yeah, sometimes, not all times, not all of them do. But yes, sometimes they're traded like those, so they open in the morning.
Like what time?
Normal working time now.
8 o'clock.
Yeah, in fact, probably from what time is it in Australia now? 6, 7. Yeah, so probably once normal office opens in Australia, that's when they will open.
Okay, so that's like 2 hours from now.
Did you see that thing just trailing now? Yeah, it's a 7:24. Yeah, so it's just about in an hour or so probably to be open.
Okay. Thank you.
Any questions on this before I just quickly just finish off with it? Can you see how that thing is trailing the stop? So you're taking the trade and you're just waiting for it. It's going and it takes you out. Boom. For those who know how to trail stops. If not, just do your normal hard stop loss and take profit. And just take you your dollar. Just make you your dollar. 0.01 lot size. And I think with this one as well, all the trades are actually 0.01. And you can see 0.01 lot. How much is it making? Sometimes it's making less than $1 actually. Let's see. Come on. What's happening now? Okay. Okay. So if you see now, a lot of times is making okay, $5 there with my 0.01. That's nice. Then here is 1.95. So it's a small account simulation. You can see
I have a
$5,
question with the loan.
$4. Yeah, go on. Who is this?
Jeff.
Jeff. Hi, Jeff.
Yes. For instance, if you trade with a 0.01 lot and then you're earning, let's say, 1.94 on one of your trades. Somebody who's trading with a 0.1 lot will be earning 10.96 or
No, that person will be earning 19. If you said 1.96, then the person will be earning 9, just 10 times that. Oh, did you see this? Did you see what just happened here? This trade would have been, if you were not trading, if we're not trailing the stop loss, this trade would have been a loss for you. But it did make money for me. Because once I hit 15 pips, take half of the trade off and start trailing the stop loss, and you can see, boom, price then came back down. And how much did he give? Only 32 cents. That's okay. It's okay to make 32 cents instead of losing the trade. How is it looking now? See, it's looking now. It's recovered that loss he made there. Yeah.
Okay, so I wanted to ask the brain behind the ERXGen before my system went off.
Just bear with me, Chin. Jeff, take a look here now. How about I'll pick up that answer now. Now, you can see what's happened here. So there was a gap down, which meant we needed to take a buy. So we took a buy, and you also notice that, see where the open was, and there's that gap there, that movement up there is because of the ask price. So it means that we are looking to cover just about 12, 14 pips, something like that. And right now, your account will be in negative, and you'll be saying to yourself, oh no, this gap system is rubbish. Yeah, because that's what happens emotionally. People follow this, you know. But then what happens after that? Boom. Price starts to move. Price starts to move. Can you see that?
9 to 10 positive. Yes.
And eventually, in this particular example, it gave us a bit more than 32 cents. This one gave us 5.86. So some days, depending on how price moves, it takes you out quick. Other days, it takes you out somewhere in the middle. Like Harvard today, one of his accounts, GBPAUD has taken him out at 34 cents. It's just the way these things are. But if you look at it as just one day, if you're only looking at the events as just one day, it can be frustrating. But you've got to let these things just go over several days, over months, to be able to see the power behind these things.
That's right.
So the guy that looked, if somebody started to look at gaps, The first day he looked at gaps, he was here, and he gave him this loss. A lot of people, some people will just give it up. It doesn't work because they just had one loss or two losses. Yeah. See, by the way, notice what happened after price went up and took us out trailing stop. Can you see price pushed back down?
Yes.
Yeah. So in reality, it's easy to look at these things simulated in history. When you're in the middle of it, a lot of people cannot cope because emotions are running wild.
True.
Yeah.
True.
That's why you've got to trade small. Take small trades. Take small trades, because everyone that has been around a bit will know that I say this a lot. Trading is like a football tournament, like your FIFA World Cup. The team that stays the longest is usually the team that carries the trophy. In trading, the trader that lasts the longest is usually the trader that learns to make mega money. So if you want to make all the money very quickly, you will crash out as quickly as you came. And you will join the pool of people who declare to others that Forex is all a scam. Nobody is making money trading Forex. Don't be in that group. Yeah. Hey, again, the other thing I want to show you on this is, oh, did you see where the stop loss was originally? It was up there. Crazy. And again, a lot of new guys that take the EA system and all that, they panic. How can I have the stop loss up there? But that's not the point. The point, I have it there. In fact, I shouldn't even have it there. The real stop loss is hidden. But I have it there just in case market does what it did January. I'm paranoid about that. And so I put it there. Just in case price does what it does. January, is February 2015, when I lost 25 grand in one day.
Whoa.
Yeah. So
what were you trading?
Well, I had a CHF trade open. I had more than one though, but they were all on CHF and they were in the wrong direction. And it just wiped me. And I didn't have stop loss. Yeah. So when I tell you, I'm not telling you because that's what they wrote in textbook. Serious stuff. Yeah. So are we okay with gaps? I will come back and look at this later to see where it eventually gets to. On the $500 account. Normally I wouldn't, yeah, I prefer to do bigger than that, but yeah, I just want to see. Can you see? So it's just picked up now. In fact, it's probably maybe even higher than that. Yeah. So from the results perspective, well, it even made $7 on one of them. Wow. 7.81 from a 0.01. So this is awesome. No, the exposure is nothing there. Then 4.48. So that account now from January on one currency pair has made for close to 10% on one currency pair. Settle down. This is weekly. So some people tell me they want to trade every day. They want to trade every day. You don't need to trade every day. Remember, if you have the plan, if you know what the plan is, then you realize you don't need to trade every day. You just follow your plan. That's a nice gap there. Let's see if it closes or whether we lose money on this. And it goes up. This is high probability. The probability that it happens is high. Can you see what's happening there?
Yes.
Boom. But for real, if you're in real life following that thing, that period it goes down. And if you do not do, see, this one is going up. So this might be a failed trade. Can you see? So instead of it coming down, which is meant to be a sell trade, it didn't. Oh, it might not. See, eventually, though, it did come down and still give us. I'm telling you, people that are overexposed on their account, when that thing happened there, yeah, this was around how many pips? Close to 100 pips. Yeah. If you were wrongly funded, if you're wrongly exposed on that trade, you will be panicking at this stage because if you're one standard lot, because a lot of new traders start trading and they want one standard lot, that would have been equivalent to 900 and something dollars. And immediately some of the new traders see 900, they don't want to close it because it's too much to lose. And so they leave it still open. Because, oh no, and what happens? It's still going up. Can you see the next day? And it doesn't pity you. You see, it's going up. And then it becomes 1,002. Oh no, 2,005. Wow. And then this is a gap. And then you can make a little bit of money. Let's see, or lose it. Oh, you made a little bit of money, but that other one is still open. And that one is now at 3.5. 35% of your account. Oh no, 5,000. Oh no. Yeah. And then you ring me. Yeah, very interesting, isn't it? It's funny, but that is reality. Right. So ERXGen.
Okay, so should we just close a trade when you say structure? If a trade just leaves your structure, you close it. I mean, when you say structure, it said something like that. I'm trying to understand what it is.
See what I did on the trades I've just taken in reality here. Yeah. So which were those now? Let me go back to the trades I took. So when you look at the other one. No. Where are those trades now? I've got too many charts open. Right. So when you look at something like this, right? I took this trade here. Yeah, and I said I was going to try and aim for is a sell trade, right? Oh, is this going to be my biggest? This is not the zoom. This is not the biggest zoom now. Why is the thing? I can't get my zoom to work on this one. Okay, so you can see this is where I entered. This is where I entered that trade. Let's delete this. This is where I entered that trade. Enter. Now, if you look, it's a sell trade, which means I'm expecting price to go down. But I also need to put my protective stop in case price goes against me. Now, the best place I like to put my protective stop is what I call structure. And remember what structure is now. Remember when we talked about structure, where price is going up, and then it gets to this area here, it turns and starts coming down. Now that's a structure level. That's a resistance level, is structure, because price got there and hit that area and then started to come down, and then it comes down, it reaches here, decides to start going up again. That means it got support here, and that's also a structure level. Now that means the price is respecting that place. And how do we know? We know because price always respects structure. And let me do an example for you, because these are all adding up knowledge for you. Now, if you look at, let's just go to a clean chart. You can see this chart now. Yeah, it's a daily time frame. This is 7th of June. Let me go back in history. Let me just go back in history, as far back as I can get. Okay, this chart is only allowing me to go back. This is only allowing me to. Oh, you can't see my chart. Oh, okay. Is the board still on?
Which one is this? Which one is this?
Yeah.
Okay, can you see it now?
No, this one.
Yep.
Yeah, what this kind of
I'm going to mute everybody now because I'm hearing some conversations. I'm hearing conversations I don't want to be hearing.
About this distance, so every first
Who is talking? Who is talking? Mute yourself, please. Right. If you want to talk, just unmute yourself and then talk, please. Right. So I go back in history, yeah, and let me start spotting those structure levels. So here, price turned here. So let me drop a line on it, right? On that structure level. Can you see what I've done? Then I come
Sorry, Mr.
again.
Chima,
Okay.
before you continue, this structure level, what is the best time frame? Because I can see on this high D1 time frame.
Doesn't matter. Just know that the higher time frames, the structure levels on higher time frames are stronger than the ones on the tiny time frame. The small time frames are just what they are, small. But they also have structure levels.
Okay.
But the ones on the bigger time frames are stronger because if something holds on the daily or the weekly, it holds power.
Okay.
Yeah. So just follow me in this thought I'm going through now. So I draw this here. I also take another one and I draw here. You can see because this area here, can you see that? And I take this and I come down here. Yeah. And I take this again and I put it down here. Yeah. Now, what did you notice? So I picked up just this region here. I didn't pick up any other region. I just picked up this region here. Just this bit here. I didn't pick up any other thing, just this bit here, right? Well, let me put one more up here. Let's take this one, which is also that one there. Now, when I did that, can you see that later here, price, what did price do? Price refused to break this place here, refused to break this place here, refused to break. Can you see? Then let's go into almost present day, present time. It might not reach because prices might be above it. Yeah, price is above it. Yeah. But if I go down to a smaller time frame, say, for instance, you can see what's happening here. How many times did it do it there? How many times? Look at that.
3
One,
times.
2. See there. Yeah. Because it happens every time. It's just the way these things are. And remember, I drew that line. I drew that line on the daily time frame. I drew those lines on the daily time frame. I've just gone down to what time frame did I go down to? H4. If I go down to M15 and go back, you will see what that looks like. Or I can't go back any further. H15 is only allowing me 8th of May. 8th of May. There's a way you can actually extend this by going to, I think it's tools, options, and then on the charts here. Can you see this place? It says maximum bars in history. It says 512,000. You can increase that to 99999999999, whatever. And maximum bars on chart, I can also increase that to 99999, whatever. And then okay it. And when I now draw this, it should be able to pull me more price data. Come on. That was actually so let's do GBP USD. GBP USD is getting me more data. Anyway, yeah, see, it's gone down to 2016 now. Can you see? So I've gone down to 2016 now. So if I did that stuff I just did again, just draw, pick out those structure levels from 2016, and then we can look at 2020 now and see if or 2018, sometime around that period, and see if any of these things, whilst I was there in 2017, none of us knew what will happen in 2019 or 2018. But what was price doing? Playing around here. Can you see that? What did price do here? Played around here. What did price do here in 2019? Played around here. What did price do here in 2019, October? Something I drew in 2017. And this is 2020 now. What did price do here? So why I started talking about this is, what is the best place I want to put my stop loss? I want to put my stop loss somewhere that will defend my trade. I don't want to be taken out of a trade that could potentially go in the direction I want it to go. But I also don't want to be in a trade that is running away from where I thought it should be. I want to be out as quick as possible. So the best place for me to do that is not to put it somewhere in the middle of nowhere, where price can either go up or down. I want to go and hide. If I'm on a buy trade, I want to go and hide behind this kind of structure level, because I know that what price does is that it can come down now, get to this area here, and then bounce off this again and start coming back up. So if my stop loss were here and I have a trade that was here and price does this thing, as is here, I'm in negative. But I don't want to come out of that trade if this will hit here and start going up. And then I'm in positive after that. Does that make sense? Who is with me?
Yes.
Yep.
Yeah. So that's how I want my stop loss to be. If it's a sell trade, and I'm on a sell trade and I want price, I took the trade here. I want to put my stop loss somewhere above this structure, as an example. It must not be this particular one, as an example. So that price goes back up. There's a potential that it will bounce off and then start coming down. But if that doesn't happen, it means that there is intention by the buyers. So I want to be out of that trade because they've broken that structure level. And they've gone up, come down, reached here, touched here again, did not do anything, and then came back up. So showing you that this place is really strong. Yeah. Moses in the craze. Moses says he's passenger side front seat. Yeah. So
we'll be looking at the D1 or H4 time frames to put our major structures and take the trade from there, or take a trade from the H1 candles, H1 time frame.
No, what I've just done for you here is to show you why, when you ask me what are structures,
yes,
I just drew those lines on the daily time frame. If you're yes, you can do what you've just said, but you don't have to do that. If you're trading on the H4 time frame, let's remove all this. If you're trading on the H4 time frame, for instance, what's happened to my chart now? Okay. Right. So if you're trading, this is H4 time frame now. Yeah, I'm on the H4 time frame. If I'm trading on the H4 time frame and I want to take a sell trade here, so if I want this, if this area is an area where I decided I want to sell, yeah, so this level here I want to sell. So the best place for one of the places I can place my stop loss can be here. I can place my stop loss here because I know this is a stop. Because what did price do? Price went up, got to this place, and then it's starting to come down. So I can put my stop loss somewhere above that level there. Does that make sense? Or I can look for the next area that I've seen that kind of thing happen, and it did happen here. So price came here and turned back down. So I can also decide to put my stop loss somewhere above here for that trade. So just the difference would then be that the stop loss would be wider in this case. So in this case, it's 117, 118 pips, 120 pips, whereas in this case is 47 pips. I can do those. I can do both. And you can see what price the price then came back down, and that would have been nicer to have explained with this one here. So I would have put my, if I wanted to enter this trade around here, I would have put my stop loss there, and price came down, filled me in on that trade, came back up, touched that area, but never got back to that level there. Never got back here. And then came down again, came back up here, my entry point, never came back to this area. So that shows I'm still protected. And then boom, down. So whatever time frame you're on, you can set you can pick out the structure levels because it will respect most times. It's just that on the smaller time frames, they're not as strong as the larger time frames. So here would have been an example of somewhere you want to put your, so all these kind of places now, you can see price turned here, price turned there, price turned there, price turned there. In fact, even there's a, that broke out a bit. There, price turned, going down. Yeah, those are the kind of areas you can, oops. Does that make sense? Do you get that? You get the point though. You've got to get the point. If you want to set it on the higher time frames, yeah, you can. You just understand that if I want to take a sell trade, if I chose to take this sell trade here, then where I will advise you set your stop loss will be at the structure level, instead of just telling me you took a 10 pip stop loss. You can do that as well. People do that. Set a 10 pip, set a 50, and I do that on some strategies. But mostly I look for some sort of price action related defense. Oops, what happened to my, did I lose that trade? One of those trades have closed. Was it a loss? No, it was a profit today. 8th of June. Was a profit. Which one was that? GBP and ZD. So let's go and see that trade. GBP and ZD. Where is it? GBP and ZD. Where is oh, this one is even going down or closer to the trade. Maybe you take your trade. GBP and ZD. NZD. Let's see. Yeah, see, it's closed the gap. Just walked away with some money. Yeah, who took the trades? Who's made some money already? I didn't say how much. Just who's made some money.
I did.
You did. Who is this?
Yes,
who is this?
Herbert.
Herbert. Okay.
Yep.
Yes, I did as well.
Who is? I did as well.
Logan.
Logan. Awesome. 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 Yeah. So, yeah, sounds simple, isn't it? But yeah. So let me go back to this and give us another 15 minutes, and then we can call it a night to just explain that ERXGen. Cielo. Right.
Here.
Okay. So the first rule, like I've explained it already, trend. Second one, I explained the tight Tokyo range. And the third one is the position of that Tokyo range. And why is that important? We've just talked about, you know, when you see a candle like this, yeah, and that candle has the high and the low, what might have happened? Let's say this is the open, this is the high. What must have happened is price opened at B and went and finished up. What might have happened in that trade is price opened here, went down first, got to the low, pushed back up, crossed the open, got to the high, pushed back down, and then closed here. Are you with me on that?
Yes.
That's the kind of thing price would have done. So what does that suggest to you? That if price got to the low and pushed back up, this low can also be considered as a mini structure level, isn't it? And the high as well. Because price pushed back from those areas. Are you with me?
Yes.
Yeah. So it means that this high here and this low here are potential structure levels, support and resistance levels. That's why I use them for stop losses as well, either the high or the low. Yeah. So that explains why the third rule of the ERXGen system. So let's take this is the first day, and let's take it is a bullish trade. So we have the 2 days, we might have another day here, or the intra-week trend. Then we have a tight Tokyo range.
This tight Tokyo range, why must we have it? I'm trying to understand why.
Because you can see the range of the day. Price has an average range that it does in a day. If price during the Asian session has done the whole range, what are you then hoping to get in the day? If during the Asian session, price has moved the entire range that it typically moves, where do you have the opportunity to go to get a breakout from?
It still moves now. It still moves.
It moves, but it will just be moving up and down inside the. Let me show you an example. Let me show you an example. Do I have this? Right. Look at this. Look at this day here. Look at this example here. See the Asian session. See the Asian session, how wide the Asian session is. Almost the whole day's range. And then when price came here, it just touched 10 pips and then came down, touched, came back up again. It's nothing compared to something like this, where price just went boom. Look at this one again. Price just inside that range, didn't move any. So it's moving, but it's not moving anywhere. Where is it going? Look at the next day as well. These are the kind of days I hate, because the full Asian session has moved the whole thing. So I prefer to have days where the Asian session is tight, even though I trade this, I actually trade things like this, but not under ERXGen. Yeah, I want to have very tight. I don't want any messing about. See, this is, look at this and look at this. So price moving the same range means I have chance to make money on that move down here. You can see what price did, boom, I made money there. That one there, boom, there's money to be made. That one there, boom, there's money to be made, because price is breaking out of the Asian session range. Does that make sense? Look, so when it's tighter, there is chance. When it's something like this here, it just be, doesn't mean it can't work, or it can work, but the chance of it. At the beginning of on Sunday nights like this, and the beginning of the day, you get this sort of drawing here. That's not complete. Does that help out in the understanding for you, Chian?
Yes, it does.
Yeah. So I don't want the whole day, just during Asian session before we have woken up. I don't want the whole thing to happen in that 6 hours, 7 hours period. For what? It means I don't have a chance to trade on that particular currency pair. But if it happens, okay, I look for a better opportunity somewhere else. Yeah. So let's now imagine that this is the high. Remember what we talked about, high and low being potential support and resistance levels. So these levels here. That means that this is the previous day. If you look at it as one candle, it is this thing you're seeing here. That means that is the high of that day here. That is the low of that day here. Oh, my battery is down. The low of that day here. So if I am closer to the up here and is on a bullish day, it is easy for price to break this one. So I can continue going up. But if that day was like this and it was in the middle here, it means that price has to come to this structure level and also this structure level And this movement here might just be only 10 pips. And this movement here might just be only 5 pips. Why do I want to do that? I want it to be closer to the bottoms or the top. And if it is if it's closer to the, so if I get something like yeah, so if I have something like this, even if price decides to reverse, I have all this movement here before it gets to the next structure level to make money. So this is my area to make money here. It's bigger than it being in the middle. Does that make sense?
Okay, yeah.
And the other one is this way. If it breaks, it can easily break here if it's a downtrend. So the other, oops. So the other, this thing will be here and all that. So price is coming down here. If it breaks, it's easy to break here. But if it decides to reverse, I don't want it hitting a level of support or resistance just in the middle there. So there's room here for me to make money. That's the mindset behind it. Yeah? Does that help? Have we had enough?
Yes, it does.
Good.
Does help. It does help, definitely.
Awesome. Awesome.
The only question, I want to ask a question on the ERXGen.
Okay.
When it appears there's a particular time that is best traded, that strategy.
Okay. Finish the thought.
Yes, that's just it. I wanted to be sure about the best time to trade it. It appears during the London session, at the beginning of the London session. Just want to be sure.
You just answered the question. At the beginning of the London session, you're ready. Sometimes it breaks out that time. Other times it can take 2 or 3 hours. And sometimes it actually breaks around during the New York session. But because these things are not waiting for you. Nobody is waiting for Chimawokoro because Chimawokoro is trading ERXGen and is waiting to get in at 8 a.m. UK time. They are not waiting for me. But we have found that typically between 8 a.m. and 10 a.m., there is a breakout because of the huge volume that comes from around Europe around that time following the Asian session. So I structure my trading to that, not them thinking that Chimawokoro is about to trade. So we'll make sure he gets the opportunity by 8 a.m. Does it make sense?
8 a.m. Yeah, that's the UK time. 8 a.m. UK time.
Yes. Or let's put it this way, 7 a.m. GMT. So whenever 7 a.m. GMT is to you, that's what time it is. I'm looking for opportunity.
Sorry, hello, Mr. Chimba.
Hey, Dejola.
Hello.
You're breaking up.
Yes, I want to ask that.
Yeah.
I wanted to ask that this ERXGen does it work on
You're breaking up. I can't hear you. And Dejola, if you type it as a chat, type it as a chat. Type it as a chat. Because I can't hear you. Let me grab my charger before my system goes off.
Careful. Careful. Écoute bien.
Dejola, would you type your question if you can as a text, because your connection wasn't letting you come through properly. Okay, any other question from someone else to Dejola? Or you can try again, Dejola, to see if you can, if it's better. Any questions? Oh, where are those trades now? What are those trades doing now? GBP, I still have GBP AUD open. It's making some money. Okay. Okay, so if I can't get the question, or Dejala is okay, you're still here. If yeah, if no other question, then let's go. Jeff, did you take trades?
No, I didn't. I will. Oh,
You were
I
scared.
forgot. No, I will start probably tomorrow. I was not thinking that the market was going to open at this time. I thought that it was going to be early in the morning.
Yeah, no, you won't see gaps by that time tomorrow.
Definitely.
You wouldn't. You wouldn't see gaps, by the way. Sorry. You don't see gaps. You will have to look for other use other strategies, Wave or ERXGen. Those will probably be what you want to look at in the morning tomorrow.
But I will have to wait until the end of the day because it will be on a daily time.
Okay. But I'm saying you will not see gap. You will probably not see gaps tomorrow.
Yes.
The reason why we see gaps is because, or let me put it this way: when you're looking at stocks and shares, those are they are traded on exchanges. Now, exchanges like Nigerian Stock Exchange, London Stock Exchange, New York Stock Exchange, those are like companies, they are corporate organizations, yeah? And so they start from 8 a.m. and they finish by 5, 6 p.m., whatever time in the normal organization will start and finish in the day. So because they start and stop, when they come back the next day, it's possible that they will see gaps on a more frequent basis, on a daily basis. But because with Forex, once it opens on Sunday night, it doesn't really close. All that happens is the daily candles just form as the days, Monday, Tuesday, Wednesday, Thursday. But on Friday, it shuts down. And between Friday and Sunday, we don't see anything happening. But life continues. People are still traveling. People are still shopping. People are still exchanging money. But we're not seeing it on the chart. But on Sunday, immediately the market opens and the price gets printed on the chart. That's when, if there has been a significant change during the weekend, that's when we see it as a gap on the chart.
Okay.
And so traders then react to it saying, we don't accept that move. So we want to go back to where we started from before we can go up or continue going down. And that's what presents people like us, retail traders, me and you and everybody that is retail trading, presents us the opportunity to then make money with that philosophy, if you get what I mean. So on Monday, you probably will not see any gap because unless you're trading stocks. Because in Forex, immediately is 23.59, 59, it just goes on to 00. No change. Because you're there. But over the weekend, it's possible. And like I said before, you don't need.
You say the market opens by 7 a.m. 7 GMT.
No, the market has opened by 1 hour ago, and it's not going to close again until Friday night. Forex.
Okay.
But there's a lot of questions when you're asking some of these questions. I know that you have not taken some of the courses, or maybe you took them,
yes,
and maybe certain things are not clear. On the ERXGen Breakout, on the ERXGen Breakout course, I talked about trading sessions. So there is the Asian session, which is made up of the Tokyo and the which other? What was the other one? Someone help me out. And then, so that's the Asian session. And then you have the European session, which is also the London session comes in there. But London used to be the biggest, so it used to be called the London session. And then you have the New York session. Yeah, so those are the things that when we talk about the New York session, the market doesn't close. It's open now from 10 p.m. UK time an hour ago until Friday night. But different time zones are going to be experiencing that openness of market. It says right now at 10 minutes past 8 in Australia, but me, I'm 11:10 in UK. And Gladys is 1:11 a.m. in Kenya. And you are now at 12:11 in South Africa. But it's the same market. It's not closed.
So which means that I will be expecting to have a gap probably on Tuesday, between Monday end and Tuesday beginning.
No.
That's what it means.
I've just said to you that you will not, because the market doesn't close. You get gaps when there is a close of the market. It is possible.
So which means that next week Sunday,
you get gaps. Sometimes you might get gaps, but it is occasional, very, very infrequent during the week. Because you've got to understand why you get the gaps. I just explained why you get the gaps. And because that why doesn't exist during Monday to Friday, you won't probably have gaps.
Okay, I see.
You will only have gaps when the market closes, but life does not close. People still go shopping on Friday, Saturday, and Sunday. Businesses still transact. But we are not seeing the effect on the charts because the market is closed. And life continues. So when the market then opens, if there has been any significant change because of how life continues, that's what we see as a gap. But because from Monday to Friday, there is no close, we are seeing things as they are happening. So you will not get a gap.
Okay.
Most likely.
Wow. I thought that it was just like a normal trading, no? The gap could happen anytime.
It can happen anytime. Because there are certain estimating circumstances that can happen during the week that will mean that you can have gaps show up during the week. But it's occasional. But then the question is this: do you need more? That's the question. Do you need more? See, you are seeing that every week you're seeing trades happen. Do you need more? Do you need more to have your account going up like this? No. Unless your plan is different. So, the point I'm trying to make is, oh, okay, you were not seeing my account when I was showing the account. Because yeah, I was not sharing the screen. So you get the point. You get the point. You don't need more. Trading gap on one currency pair. One currency pair in a year might give you something between like 5 to 10%. One currency pair. 5 to 10%. If you're trading 10 of them, you're looking at 50%. Yeah, 50 to 100%. You're looking at that, providing everything works right. So you don't need more. You just need to understand. So everyday involvement in the market is not equal to success. The only thing that is equal to success is making money. But if your involvement in the market every time is losing you more money, if you get the point, then there's no point being in the market very frequently. You don't need it. Do you understand that? It will take time. Don't worry. Just hang around, stay around. These things drop. They don't happen in a day. They drop. They make more meaning and more sense as you practice.
Okay, thank you.
Okay. Yes, Chamaka, maybe next week we can do that. Chamaka is asking, can we also take trades based on on 5 TT wave. So what you need to do is to, during the weekend, research the charts, find something you think is an opportunity. Tell me about it. I'll take the trade on Sunday night, show you what to do. Yeah, anybody, research your charts during the weekend, which you should really be doing and learning. Then tell me there's an opportunity you're looking at. Do I think it is valid? And then I can look at it with you and everybody on the Sunday nights, and people are learning, you're learning, and we can take trades based on it. Does that make sense?
Yes, sir. Oh, fine.
Good. Okay, I'm tired too now. I know people are glad this is up now. It's 1 a.m. there, 15 minutes past 1. So she should be, she needs to go. And Logan, you stayed longer than you thought you would. So
yes.
So yeah, and Jeff as well.
Me too.
Yeah, okay, yeah, it's true too. You're 12:15 now. Yeah, so let's just go find those opportunities. Keep our heads down. Just get me $1 per trade per day. That's all I'm looking for from you. We can take it to $2, take it to $5, but just get me $1 per trade, and don't take too many trades. And then finish the day. Yeah, yeah. Moses says wishing everyone a peaceful week. Yeah, just go make some money and keep learning. There are things I'm working on that hopefully should come out good. Some improvements on things like the wave that I'm working on that hopefully should come out good. I'm testing a few things. You will know about them as things progress. Even things like the ERXGen, Gap, I'm constantly working on them, just to help us optimize our profitability and stuff like that. So when they happen, I'll always let you know. Okay. All right. So you all go have a great week ahead, and let's stay in touch.
Thank you. Same to you.
Okay.
Thank you. Good night.
Good night. Bye-bye.
Thank you. Good night.
And SA, have a good day ahead of us, and we'll soon meet you up in the day.
Good night.
All right.